even though the Dow backed off today, there was one crucial factor that had to be observed, which was it still didn't close below the T line. Now, it has possibilities, but the possibilities kind of get diminished a little bit when you analyze what the other indexes have done. For example, the NASDAQ, although it traded lower, it came back up and closed right about where it opened, so it didn't show any really change of investor sentiment. So a very simple strategy for continuing an uptrend or analyzing whether an uptrend is continuing is waiting to see a candlestick reversal signal and a close below the T line. Until that happens, it has to be assumed that the uptrend remains in progress. Knowing that there is not any major change of investor sentiment in the markets, candlestick investors can take advantage of the signal setups, such as a bullish flutter kicker. Anytime we see a bearish candle and the next day they gap it up above the previous day's open, there's a good potential of a kicker signal. But if that second day is an indecisive day like a doji day, that allows for the candlestick investor to be prepared for the simple rule of the doji, which is they're usually going to move it in the direction of how they open it after a doji. And if they open up positive, assuming they're going to trade positive, that makes for a flutter kicker signal. In other words, if you took out the little flutter, you basically have a kicker signal formation, which is an illustration of a very strong investor sentiment reversal. This allows the candlestick investor to be prepared for a high profit or high probability trade. There's our bearish candle. They gap it up above the previous day's open to a doji. Very simple. If it does a positive open, you can be buying immediately, anticipating a bullish doji sandwich, which would also confirm that your J-hook pattern is in progress, which would confirm this whole pattern of a classic pattern with your fry pan bottom, strong price move, J-hook pattern. And remember the difference between a bullish flutter kicker or a bearish flutter kicker signal and a doji sandwich. A doji sandwich has a bearish candle followed by a doji and then a lower open and another candle, which the third candle is usually the same magnitude as the candle prior to the doji, which makes this a doji sandwich with a doji in between. It also confirms that there's more downside, as we're seeing in the crude oil prices. So this makes for a very good short, or if you're following the crude oil stocks, it gives you a lot more indication that if you see a weak signal in a crude oil stock, that's a good time to be going short on that stock also. That'll be it. We'll see you in the chat rooms.